All right, guys, we've got another crazy day to cover in the market. We're also going to cover Microsoft earnings. They announced earnings today, and they yo-yoed a little bit on those earnings. So we're going to talk about all of that in this video, so stick around. Hey guys, welcome back to TipRanks. I'm Richard Allen. Thank you so much for joining me for another video. Wow, it was another crazy day in the market. So we're going to cover the major indices and how they did today. Didn't fare as well as yesterday, but it was still a crazy yo-yo of a day going up and down. So we're going to talk about that. And then at the end of this, towards the end of this video, we're going to talk about Microsoft releasing earnings and the crazy price action that happened with Microsoft today as well. But they're down quite a bit year to date. So we're going to talk about the potential opportunity that is here with one of the largest companies in the world. Let's jump right over to TipRanks.com, take a peek at the major indices. First, we'll look at the S&P 500 finishing down 1.22% on the day, but you can see the crazy price action that happened there between seeing like it was almost going to go up and go green and then finished down on the day. The Dow was at 1 point green today. It opened up down quite a bit and then finished down slightly, down only 0.19%. For the Dow Jones Industrial Average. The NASDAQ, another crazy day for the NASDAQ, but similar to the S&P. It was looking like towards the end of the day it was going to be okay, and then they finished down 2.48% on the day. The tech-heavy NASDAQ finishing down quite a bit. But let's switch over to Microsoft. They announced earnings today, but take a peek at the charts here for Microsoft, finishing down on the day 2.66%. But if you take a peek at how Microsoft is doing this year, down 13.82% year to date. So far this month, down almost 14%. But they actually had a good day after hours, finishing up 1.91%. Microsoft beat both on earnings and revenue, and they delivered some upbeat guidance. So that's why they actually finished up after hours 2%. Earnings for Microsoft came in at $2.48 per share adjusted versus $2.31 per share, which was expected by analysts. So that was a good beat there on earnings. Revenue was also a beat. $51.73 billion versus $50.88 billion as expected by analysts. That was a really, really nice beat there for revenue as well. And one big thing that we were looking at for Microsoft was their Azure cloud platform and how well that business is growing. And that's the direct competitor to, things like AWS and Google's cloud platform. Azure grew by 46%, which just met expectations. So that was a little bit of a concern for Microsoft, but they still met expectations there. It is a little bit of a drop from the previous quarter, but still growing their cloud services by 46% is really, really impressive in a very competitive landscape. So I'm excited that Microsoft is doing what they're doing. Now, recently, we just talked about the big acquisition of Activision Blizzard. Activision has been plagued with issues at the company from an HR standpoint, really, over the past several months to several years. And this was the largest tech acquisition ever, a $68.7 billion deal. Microsoft acquiring Activision Blizzard, which owns massive IP like Call of Duty, World of Warcraft, Candy Crush, I believe, the maker King there. They own a ton of different IP, Activision Blizzard does. And this is a fantastic acquisition for Microsoft, taking a big chip at Sony and their PlayStation network. It's going to be a big deal for Microsoft going forward. But that's one of the reasons Microsoft fell not that long ago, fell a couple percentage points. I think overall, this is a big opportunity to purchase the dip on Microsoft. I really, really do. Now, it could be very, very volatile over the next couple days. So we're going to talk about really quick, just touch on the Federal Reserve and what they're likely to do tomorrow. But tomorrow could be a pretty tumultuous day. So let's talk about the Federal Reserve really quick before we jump into what the analysts think overall about Microsoft. We're likely to see, like we talked about in yesterday's video, we're likely to see talk of a rate hike in March. Now, there's a chance that the rate hike will be higher than 0.25%. There's a chance it could be a little more hawkish and be even 0.5%. I believe that would spook the market a little more. But I think with the latest crash, I think they're likely to be a bit more cautious, and I think we're likely to still see a rate hike in March. I don't think we'll be lucky and not see a rate hike, but I think 0.25% rate hike is expected for March. The big concern right now is that the Fed is talking about tapering back not only their bond purchases, but actually paring back the $9 trillion balance sheet that they have. That's doubled during the pandemic. So potentially selling some stuff as well. So that could potentially spook the market as well. We maybe will hear something about that tomorrow. So keep those things in mind. I believe there's going to be more volatility like we saw over the past couple days, like we've seen this entire month. I believe tomorrow is going to be a little bit crazy. There's a chance, though, that we get a really, really dovish Fed tomorrow, and they're like, you know what? We moved too soon. We're not hiking any rates. If that happens, the market, I believe, will go absolutely crazy tomorrow, and people will be buying the dip. Just my opinion. But let's take a peek over at Microsoft and see what the analysts have to say right now about Microsoft. Again, strong buy, 27 ratings, 26 buys, and 1 hold with an average upside over the next 12 months. Remember, all these price targets are over the next 12 months of 29%, 29.38% to be exact for Microsoft. So that would be some pretty good upside. But I think with this 14% dip, this month so far on Microsoft, I really do think it is a buying opportunity for a great American company, one of the largest companies in the world by market cap and by revenue. It's a massive, massive company. So, guys, thank you so much for joining me for another video. As always, I appreciate each and every single one of you. If you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.